Let's talk about the company whose products saw a sharp surge due to COVID-19 as people focus more on their health and hygiene, and this helps Galaxy Surfactants to grow in terms of volumes and also in terms of revenue. The stock is up in the past 6 months. The stock is up 39% during the second COVID wave, and in the past 1 year if we talk about, then the stock has been almost a doubler. But compared to the first wave, how the dynamics have now changed with respect to the demand, the supply chain constraints, the raw material prices, how they have changed now in the second wave. We tried to understand more on this as the COO of the company, Natarajan, joins ET Now for an exclusive interview. With respect to the current demand trends, Natarajan informs us that this year also they are witnessing similar kind of a shift as they saw in the last year. As last year the demand shifted from Q1 to Q2, and this year also they are hopeful of a gradual pickup in the demand. And talking about the month of June, they are witnessing the demand to be coming back. Last year the company did witness the overall volumes growth of 6%, and in the Indian market the volume growth was at 11%. This year also they expect the volume growth to be in this range only. So this is their take on the demand. Now talking about what has not been stable for the company is the raw material prices, as we see that they have been very volatile in the past, and especially talking about the palm oil prices. We are aware that the palm oil prices did witness a sharp decline, but now as per the company they are heading back to their normal levels. The raw material prices account to 65 to 70% of the overall sales for the company, so that's a significant chunk. They are watchful of how the raw material prices for the different commodities pan out and the trend, what they are hopeful to see in the coming times ahead, and they will be watchful for the next 2 months how the trend in the different commodities emerge out to be. Now coming to their performance in the segments of the operation that the company is into. Firstly, the company is into performance product. They are witnessing a good growth over there as per the company, as the hygiene patterns have permanently been shifted by the COVID pandemic. The focus market for the company is India, Africa, Middle East and Turkey. And in the specialty ingredients segment, the company has focused into Europe, US and Asia Pacific markets. The first half of last year did saw a negative growth in this segment, but they did pick up very well in the second half, and this year also they are hopeful of a good demand in this segment as well, and this will be further helped by the capacity addition being undertaken by the company. Due to COVID-19, the capex projects were delayed, as the company has been working in the past 2 years to adding capacities in both of their segments. For the Jhagadia unit, they have been working on that, and they are hopeful to get both of these projects to be commissioned in the next 6 months, and they will come into force, which will add to the overall supply facilities for the company. The company is prepared to reduce their carbon footprint, and they are also working to tailor-made solution for their customers. Now what has not changed till now since the first wave of the pandemic is the hike in the freight rates. The company informs that the freight rates are at all-time high, and they do not expect this to normalize until sooner than the end of this calendar year. This is one factor that has been impacting the company. The container cost surge is adding to the supply chain related issues for the company. The logistical challenges have lasted longer than what the company did actually anticipated, and they still continue to impact the company. Going forward, they are cautiously optimistic because the operational challenges did continue for the company, and for the current year they are hopeful of 6 to 8% of their overall volumes and as well as the growth in their revenues. They are giving a conservative target as of now because they are also wary about the third wave, which has already started impacting some of the countries, and going forward they are hopeful that the demand should be good. They are managing their raw material prices, the risk there, but the supply chain constraints did persist for the company. As and when we see that this issue has been resolved by the company, we will witness that all wheels will be working for the company. So this was Galaxy Surfactants for you.